Few generations get to witness a recession, and even fewer get an opportunity to win while others lose. Recessions provide once-in-a-lifetime opportunity to build your wealth and set yourself up and your future families for life. With inflation up, the stock market down, and gross domestic product or GDP in the red, experts are debating whether the US has entered a recession. While the jury is still out on that question, you may wonder what you can do now to best position your investments to cope with stormy economic weather and make sure your wealth increases rather than decreases. Here's what you need to know about building your wealth during a recession. Investors must plan when structuring their portfolios, even if the next recession is mild. Cash is king during a recession. In economic downturns, cash is king. As companies cut back and job losses mount, it's better to be safe than sorry and beef up cash reserves during times of high employment. However, selling investments to get cash in anticipation of a recession is risky. You might sell prematurely and get trapped in cash as markets rise. A better strategy is to shift into investments that are well positioned to weather a recession. This is why keeping a certain part of your portfolio in cash or highly liquid securities like a money market mutual fund is always wise. Own defensive stocks in a recession. Consumer discretionary stocks tend to see strong gains when the economy is growing. They're called cyclical stocks, since gains and losses in this group depend on the rise and fall of economic cycles and consumer confidence. Defensive names in non-cyclical sectors like utility stocks and consumer staple stocks tend to be insulated from those ups and downs. During a recession, defensive stocks can help protect your portfolio. Companies that sell essential services and goods such as food, electricity, and shelter are generally non-cyclical and less exposed to economic cycles. Sales of consumer staples. Food, beverages, and household products are fairly recession-proof because no matter how poorly the economy is doing, people still need to eat and use toilet paper. Demand for utilities also holds up in a recession, helping utilities outperform other stock sectors during a downturn. If anything, when countries experience more severe economic downturns, healthcare employment seems to increase. Buy quality assets during a recession. Investors should seek out quality across asset classes to protect the portfolio during a downturn. A little something finance geeks would know: low beta, high return on investments, and low leverage are hallmarks of quality investments. Such companies are called all-weather businesses that do not depend on economic growth to thrive or survive. Companies with high recurring revenue, such as subscription-based sales models, are less sensitive to economic downturns. You want to avoid companies with high debt loads, as they could have trouble servicing their debt if revenues and cash flows decline. They could also have trouble refinancing debt at maturity if credit conditions and lending standards tighten. Avoid growth stocks during a recession. Heading toward a potential recession is not the time to grow your own growth stocks. Growth stocks, especially profitless companies that are tied to high growth prospects, do worse during recession. Instead, consider more income-producing investments and dividend-paying stocks, which bring us to our final point. Invest in dividend stocks. The best dividend stocks provide a cushion for your portfolio during recessions. Even if a company's stock price falls, it may keep paying dividends. Dividends can indicate strength and offer a method to dollar-cost average during market volatility. Don't overreact during a recession. Even if a recession is on the horizon, no one can know how long it will last or to what degree it will take effect in the stock market. Often, the best way to invest during a recession is just what you've already been doing. While recessions can be challenging for returns and growing wealth, we also see counter-cyclical rallies, and the market is always forward-looking, so the keys are to remain fully invested, not to be whipsawed by short-term market gyrations, and to keep focused on your long-term goals. Is the U.S. in a recession yet? The U.S. has not officially entered a recession as of yet. The National Bureau of Economic Research, or NBER, an independent nonprofit responsible for determining the beginning and end points of U.S. recessions, waits to make a declaration until sufficient data is available. NBER It defines a recession as a significant decline in economic activity that is spread across the economy and that lasts for more than a few months. Exceptions are made for extreme events, such as the sharp decline in economic activity in February 2020 that led to the intense, if short-lived, COVID-19 recession. That was all from us today. For more personal finance tips, make sure to subscribe to the channel. See you in the next one.